Yo, so it's been a while since I made a video, but I wanted to make a video with the recent flash crash in the market, and specifically focusing on crypto and the potential that we have here and what this means going forward. Um, we're down pretty heavy on crypto, as you can see. I mean, 7% Solana, 6% Ethereum. It was all the way down at 9% down today, I'm pretty sure, at one point. Bitcoin, 4%. I just want to go over it because the last time I put a big bag into crypto, it was at $78,000, and we held it all the way up to 100K um, before reevaluating. And right now, here we have, I think, around 25K in total invested in crypto. Um, how can I hide this? Uh, so currently $26,000, I think, is what that says in crypto. I hope that you can like kind of see that. Yeah, there we go. 26,000, almost 27 grand in crypto right now. With the majority of my holdings in Bitcoin and ETH, actually those two are pretty even right now with the market down. But when it returns to recent levels, we should be, I guess, leveraged heavier in Ethereum than Bitcoin. But yeah, around $30,000 um, in each. Um, Sorry, not in each, in total invested in crypto. But let's just go over it. Let's do a market evaluation real quick. I wanted to just show you guys how you can evaluate the technical analysis side of crypto and how we can look for entries. And it's actually pretty simple. So let's get into it. I'm gonna start on past, so we can see how it moved and then compare that to what's happening right now. So to start off, I mean, crypto trades on levels. So these bars are, I guess, you could call it supply and demand levels. I don't really think that's very fitting because it just sounds kind of corny, but it is kind of supply and demand levels. So as you can see, they kind of like, it's kind of easy to spot, but these levels are areas where it continuously bounces off of. So how can I draw this? So for instance, we over here we came up, bounced back down off this level, and then also kind of like areas where we chop and spike through is a good way of spotting where these levels are. So usually what happens on these levels is that we will kind of chop in them or on top of them or below them, and then big spikes happen off of these levels. So you're kind of looking for areas where it's consolidating. So as you can see, I mean, a good example, let's see, like right here, we're at this level, come down straight through this level, bounce up, chop, 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 spike, chop, chop, chop at this level, spike, bounce off again, bounce up, chop, spike all the way down to these levels, spike through, chop, 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 spike, this level holds, spike down, this level holds, chop, 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 spike, retest. So you see what I mean? It's just, it consistently um, will bounce and react off of these levels, and it's pretty easy to spot, which is nice. But it's really where these areas of, I guess, manipulation happen, and we can use these to our advantage. So, I mean, it's pretty obvious, right? These spikes up and down, and these are the types of moves that you're looking for. This consolidation, spike, 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 consolidation, spike up, level, consolidate, spike down, level. You know what I'm saying? And then usually we'll have a breakout once we move past one of these higher levels. So as you can see, back in November of 2024 in October, we, spiked through. I created a brand new level. You can see that I marked up a brand new level, this see-through level. I made it see-through so that it stands out a little bit less, but I might be able to make it stand out a little bit. But this level was one of the last levels that was supporting. So when you see support on these levels, and especially lining up with a overall downtrend, um, arrow line, I guess you could say, that's showing potential for a breakout. And so what did we see? We saw consolidation, and then we saw a spike, retest, and then boom. I mean, it takes off from there. Um, so to aid in our analysis, we can also look for SMTs with Bitcoin and Ethereum and Solana, I guess, too, and other cryptocurrencies. But Bitcoin being the leading index, I'm using terms that we would use in day trading with Nasdaq and S&P SMTs with indexes for day trading. But we can use SMTs for these cryptocurrencies, with Bitcoin being essentially one. I don't know how else to relate it besides like Bitcoin being one index and then every other currency being like the other index, I guess. So like what you would be looking for is Bitcoin to have a uh, a low and then a lower low, while Ethereum, Solana, Doge, XRP would be making a low and a higher low, or vice versa, right? That's what an SMT would be. It's when a chart makes, it's when one index for S&P and Nasdaq, it would be like the Nasdaq creates, here I can just draw it out low key. It would be like when the Nasdaq goes up, creates a low. Wow, this is like really sloppy. I think I zoomed in too much. So if like this was the Nasdaq, we're going up, down, right? So that would be the Nasdaq. And then similarly, the S&P would have the same price movement, right? We make this high, come back down, but then we take out this high and go back down. And what you're seeing there is this is the SMT on Nasdaq with the S&P 500. So it's making the same price movement, but one of them is sweeping out the previous higher low. So the bearish version of that could be like, let's use Bitcoin and Ethereum as an example. Bitcoin is going up and then takes out that low and then moves higher, while Ethereum, is moving similar price action, doesn't take out that low, and then moves higher. So again, the SMT would be from this low on Bitcoin to that lower low on Bitcoin that we swept, and then this low on Ethereum and the higher low. So it's a smart money trading strategy where there's a divergence in price action, hence SMT divergence, and it can signal what a leading index is doing and what then a following index or cryptocurrency, what a leading cryptocurrency is doing in a following, almost like a child cryptocurrency. Someone under, we have the father cryptocurrency and then the child, like a parent, and you know what I'm saying. So a leading cryptocurrency can then signal what could potentially happen for the following cryptocurrencies. So and as you can see, I mean, it happened in July to August on Bitcoin, and then a low and a higher low in August for Ethereum. And that signals, right, that would be the signal for our price moving higher. It would be an additional signal for price moving higher from these levels. So what's happening right now, right? We have clearly we have these are take profits. We can get rid of some of these green lines over here. Yeah, so we are creating an SMT right now, and this is one of the best scenarios that we can be in right now. We have Ethereum at lows that we haven't seen since August of 2025, and these lows are, Ethereum being under $4,000 is an insane deal. I mean, if Bitcoin moves under $100,000, do you understand? Like, you have to bid the flying, you have to bid the fuck out of that. I mean, you have to, right? I mean, 100 grand, that is the cheapest Bitcoin is ever going to get. I'm expecting it to hold this 110 level, but like, right, if it gets lower than that, it's only better for us as investors in long term. Sorry about that. My roommate came in, so I had to stop. But let's get back to what I was talking about. So, yes, I do think that these levels, unfortunately, not unfortunately, I do think these levels are going to get hit. I think that we are going to come down and sweep this 109-ish level again. What is this? 107 level again for Bitcoin. And looking to the future, I mean, from there, it's just going to be back to the upside. Here is my original bias was, I didn't think that originally we were going to go back down into the 110 range. I was expecting this level to hold. However, I'm okay with us sweeping these lows because they're near equal lows, and it's just more, sell side liquidity that we can come and sweep. And the good thing is that originally we created this bullish SMT for Bitcoin and Ethereum. Technically the low is up here, but it will be the same low if this SMT holds, which I think it will. Unfortunately, I do think that Ethereum is going to shoot through the 4,000 level. In fact, it's already closing below it. And I think that we are going to get more to the 3,650 level. That is my next buying order, actually. I have a limit order set for 3,650. And I think that we will come down to that level while Bitcoin comes down and sweeps out these lows at 107. I'm okay with that happening because it will still hold our bullish SMT, and that would just be even more confirmation that we want to push higher, take out all-time highs, and then my next assumed area of resistance would be 5,500. Honestly, just a simple number, and if we do come down and sweep, it would be a 40% increase up there. Amazing returns. For me, that would be amazing returns. And for Bitcoin, I mean, this is just, if we come down to 107 and we hit 200,000, which has been predicted by the end of 2025, that would be an 80% increase, which is insane. I don't think that that's entirely realistic. However, I think that it's in the picture. 150,000 is 100% in the picture, which is again 40% increase. And if Ethereum is able to hit a 40% increase just to hit 5,500, think what Bitcoin can do. So if Bitcoin on the flip side, if Bitcoin can hit a 40% increase, Ethereum can hit even more, probably a 100% increase and a 1x. So let's keep these things in mind. And again, it's pretty simple to mark out these levels on crypto charts, and it is super accurate and a good way to get around key levels and supply and resistance zones, I guess, that we can anticipate what price is going to do when we also use SMT divergences to make sound decisions about where we think price is going to go. I am happy, though, that we are coming down after sweeping all-time highs and coming back down and retesting for Ethereum. I think that's a good thing. I just hope that we do not sweep this low. It's in the 28th of July, and as you can see, the 28th of July is up here for Bitcoin. So if we sweep these lows, I think that looks amazing, and that will keep our bullish SMT intact for both Ethereum and Solana, and it should be up from here, and that would just be more bullish confirmation, and I really like that. So while I'm talking about the future for crypto and all of this, I figured I might as well talk about the S&P as well. As you guys actually may not know, but for the tariff dip, I literally entered to the tick. I was in drawdown for maybe a couple of hours with the tariff dip. This is where I entered, and we had a long position. It was supposed to go till all-time highs, but I took partials at around 6,000 because I figured that was a good risk to reward for our long position, and I was getting happy. And once I saw this chop, I kind of just took partials, missing out ultimately on around $5,000 worth of gains on top of that. But it's okay, you can't complain with how good of a risk reward that is. I entered to the tick on the S&P 500, so I'm pretty confident in my analysis. But this is where it gets interesting. The S&P 500 and the NASDAQ both have these daily and weekly lows that I think would be amazing targets for us. We have obviously no liquidity up at the top, right? Because we're at all-time highs. And there's only liquidity on the downside. Now, there is only really major liquidity down here, which is, let's see how much of a, which is a 7% dip. That could take an entire week and would require a news event to make that happen. However, I will say that I think it is possible, but I think, again, it would have to be a news event that would make that happen. And I do want to see these daily lows get taken out on the NASDAQ and S&P 500. The S&P 500, we have 3 near equal lows, 2 definitely near equal lows in the daily time frame, and then the weekly time frame, we have these weekly near equal lows on the S&P 500 and the NASDAQ. Not necessarily near equal lows for the weekly time frame, just 1 low each, but these near equal daily lows are still good draws and still a decent dive down, probably 5%. Okay, 3-4%, even better. So not that crazy to imagine. This is our 3rd day in a row that we've closed negative. I could see a little bit of a retrace and then definitely take some partials on some of these companies that are up pretty high, because if those companies, are able to tank a little bit, it will definitely lead the indexes down and will pull those down, since that's kind of what's inflating the market right now. With that being said, I think that that's also not a bad play for me in general. I'm pretty over leveraged on the big tech companies right now, because obviously they're performing well and my profits are just high. My unrealized gains, well, now realized gains, I pulled out around $25,000 and liquidated $25,000 in the past 2 days right before this flash crash happened. And a lot of those were on the big tech companies, some of them cutting my position almost 30-40%, and just realizing some of those gains and then looking to buy lower. If it doesn't happen, man, it will run and we'll just keep going higher, and I wouldn't say that I'm missing out on much gains, because we do need some relief. I think that the weekly candle should close red, which is a good sign, but I think that we need to go a little bit lower, and we have some of these draws that we need to take out, and if we don't take them out before we run now, it's just going to be harder to do so once we get up too high. So with that being said, I do think that we need to take out the daily lows and weekly lows on S&P and NASDAQ, and then again, Bitcoin and Ethereum, amazing buying opportunities, bullish SMT that should be holding in these levels. I'm happy, I'm looking forward to it, and I hope you guys take advantage. With all that being said, this is not financial advice. I do not recommend trying to time the markets. However, I think that this technical analysis and then data analysis on just news data and what's happening in the world, I think that it's fair to try and mark out these things. And the more practice that you get doing it, the better it's going to help your day trading and long-term investments in general. Obviously, if you're planning on investing long-term, it doesn't matter to time the market, but if you want to get something for a cheap price, then it does help you, especially for crypto when it's kind of easy to do this, marking out those levels and supply and resistance zones. So with that being said, thank you guys for watching. Make some bread, make some money, put it aside, and wait for these big dips to happen and capitalize on it. So thank you guys. Subscribe. Peace.